All right, guys, welcome to the video. Anthony Special here with Hawkeye Traders. Hope you're having a wonderful day. Going to keep this one kind of short and sweet because it doesn't really require much explanation. I want to show you very specifically how in a trending market, just like price will increase and will impulse and correct, volume will do exactly the same thing. So if you are trading in a trend, right, the market's moving in a favorable direction with some deal of consistency, it is not uncommon for price surges to be accompanied by volume surges, and then either consolidation or corrections, for that matter, to be accompanied by corrections or consolidation in volume as well. Now, I want you to look very specifically. This is the high of the session, and this I identified this live, guys. This is not hindsight, okay? I know I focus a lot on the futures market because it's what I personally trade, but the theory behind all this is applicable across the board. Stocks, futures, forex, cryptocurrencies, day trading, swing trading, position trading, however you approach the market. But there is congruency between volume and price action, and that is what my goal is to show you. So you can see we made a session high here. We pulled back. We started recovering from that. We actually got above it pretty nicely. And then the market just went a little sideways as the volume dropped. And as soon as the 750 candle hit, closed above the prior high, made a new high for the session, full-bodied candle with a knock up in buying volume. That's it, right? No different than a price action pullback, right? So this is a price action pullback. All right, so price did what? Pulled back. Here it broke out. Here it followed through. Well, the volume did what? Pulled back. Here's where it broke out. Here's where it followed through. So don't miss the importance of the volume pullback, okay? It's easy to identify. You know, the Hawkeye prints the colors for you. You want it to all be favorable, right? You want to know that buyers are in control the whole time. You can identify the pullback, right? And then we get the next surge. Boom. Big push here. I mean, guys, this is not a massive move, but let me tell you something. Once you've built consistency, right? Once you've built consistency, you don't need more than 20 or 30 ticks a day. Right? Like once you understand what it is you're doing, meaning the relationship between volume and price action, once you understand that you need to be in a certain psychological mindset, once you understand that your emotions need to be completely in check, if you can extract 20 or 30 ticks a day out of the market, you can live the life of among kings. Because at that point, it just becomes increasing your position size over time as your account grows. In turn, you will see greater returns, right? So for me, I don't need 400 or 500 ticks, right? I need 20 or 30 ticks, and I'm very content. And that's all that it has to be, right? Some people are looking differently, and different time horizons are going to call for different strategies. But if I can accurately predict 20 or 30 ticks, it's a home run, right? And that's the point I want you to get to. If you're day trading, you don't listen. When the market offers you this incredible run, take it. Take it. And that's why I always leave a small piece of my position on. But more often than not, if you can accurately get over and over and over again, whether it's a small percentage return on a stock account, or a forex account, or pips, or ticks, or whatever your approach to the market is, consistency over time becomes more valuable than anything else. So, from this video, I encourage you, as you're watching the market tomorrow or whenever it is that you see this video, I encourage you, as you're looking for price pullbacks, I would like you to look for volume pullbacks. And let me know if you see a correlation between a volume pullback, a consolidative state, and then a new breakout based on new volume coming into the market. The volume broke the pullback at 750, right? We had one more candle before the explosion occurred. But notice at 755, the volume was still increasing, laying the groundwork for the 8 a.m. big pop. So, again, I ask you, take anything from this video, hopefully it's educational in nature, hopefully you learned something. So many people are focused on the price pullback that they forget about the volume pullback. So, as you're approaching the market tomorrow, or whenever it is, do yourself a favor. Watch the volume just as close as you do the price action. And when you can get those two to correlate together, you have just reached a different level. Now, that's what we offer. And that's what we teach at Hawkeye. Right? We offer you the tools to do this with great ease. We offer you the Hawkeye Mastery Library so that you can learn how to do this. Right? I can't just hand you these indicators and say, okay, good luck, let me know how you make out. No. I want you to put our volume on. I want you to put our radar dots on, our paint bar, our wide bar, our pivots. I want you to put all those on your chart. I want you to clean your chart of all the other stuff. And I want you to start looking, as you work through the Hawkeye Mastery Library, at how is volume and price action reacting with each other, and can I put them together to put the odds in my favor? More often than not, when those two are working together in harmony, an opportunity can be more easily identified, right? And opportunities that you would never even think to look at because you're so focused on the price or what some indicator that's on your screen is telling you to do that you're not looking at who's in control. At the end of the day, the market is driven by buyers and sellers. If you're not understanding who, the buyer or the seller, is in control and to what degree they're in control, you're missing the underlying picture. And I believe the underlying picture is the answer to what most traders suffer, inconsistency from, because they're missing the biggest piece. So again, do yourself a favor, access the Hawkeye indicators, put them up on your chart just like I do, start looking at areas in the market where volume and price action can give you double confirmation, and then start seeing how that applies to your trade plan and how you can start stepping in a more depth of thought process within your analysis. I left some links below this video. Please click on them, consume the content. Feel free to reach out to myself and my Hawkeye Concierge team. Be happy to answer any questions you have. But it's up to you to take action. It's up to you to level up your trading game. Right? We're here to help you, but you must be committed in taking that next step forward, understanding that relationship between volume and price action, employing it into your trade plan with great risk management, and seeing how you can now get a completely different perspective of the market. Guys, I appreciate you. Thank you for being here. God bless, and I will see you in the next video.